morning. It is Thursday. It is the Bubba Show. I'm Bubba. So today I want to talk about identifying when markets start to look toppy or they start to make a top. You know, I think last week's action showed us that that the bulls have finally gotten a little bit tired. They finally have started to pull in their horns a little bit. You saw some profit taking. You saw some news from the Fed that drove the market down much lower. But then, of course, you found the market did find support and rallied back again. But forming tops in a market is not one day where the market tops and that's the end. When a market is topping, what I would expect to see through this, and I do believe the market is topping here, and this does not go to say that we're going into a bearish phase and that we're going to go back into a bear market. What this is saying is that I believe we're going to get into a wide sweeping congestion before the market makes its next big move. I would expect, again, I've been using these numbers all week, but 1500 to 1530 in the S&P. And what we want to look for is how the market trades. Now, what I would expect to see is when the market goes up to a top, it's going to look like you're going to want to buy it. You're going to go, oh my God, I'm going to miss this rally, and that's just the opposite of what you want to do. You want to look for an opportunity to sell into the strength of the market. And then when the market goes down, you go, oh, I missed this short, and that's going to be just the time you're going to want to buy it. That's how a market starts to form tops, because even when a market is going to switch direction, and we don't know that this is it, what we do know or what we do think is that the top is in for now. But when markets are forming tops, you will see some sell-offs looking like they're going to go down to zero, and they're going to just turn around on a dime. And you're going to see some rallies that look like you're going to want to buy them. But that's how a market starts to form the next position. Tops take time to build, and what happens is you're going to get some very vicious rallies out of some very conditions. You go, wow, this market wants to go straight down, it's going to crash here, and next thing you know, 20 minutes later, it's going to be rallying going back towards its highs. Now, we've seen this action start to happen, and we've seen it before. If you've been around long enough, you've seen this before. Markets in a topping market, rallies in those type of markets are vicious. They get crazy and they come after them like nothing. So why does that happen? You get lots of short covering because people that are trying to sell the top figure it's time to take profit. People that miss the move figure, I got to get in or I'm not going to get in. But really what you're looking for is for the action here, and you want to use that resistance level to look to as the top. Now what I would expect to see is equal or lower highs when we go back up and equal lows to the bottom here. And this is what you want to watch for, and this is the idea and the general focus of a market that is starting to make a top. And it looks very much so. There's a lot of strength coming out of a lot of the riskier assets, which indicate a top is possibly starting to be put in place here. As you see, the commodity space is starting to get sold off heavily, gold down heavy. It all brings in that the overall market looks like a top, and also you watch the telephone stocks, utility stocks, the safer stocks are what's getting bought right now. Those are all signs that the market's topping. So watch the levels. Don't get caught up in the momentum now. Now you want to look for to be with the overall trend or to try to scalp off, different levels of the market. And that's what you do when you're looking for a top in the market, and that's how you trade it. Remember, Bubba's Picks. Remember, for Thursday, the Bubba Show. Have a great day. We'll talk to you on Friday, Commodity Corner.